BTC price advances toward $35,000, potentially opening the door for ETH, APT, QNT and RUNE to move higher. Hopes of approval for a spot Bitcoin exchange traded fund by the United States Securities and Exchange Commission boosted Bitcoin's price by 27% in October. This improved sentiment attracting aggressive any possible for the camera crypto, including that ministering of the environment, the type acre oversight. Appearance will result in the GAN taper and into the approval. By the end of a camera hole, I'm joined by Bloomberg senior ETF analyst Eric Balchunas highlighted in a post on X, formerly Twitter, that ProShares Bitcoin Strategy ETF, the first futures-based ETF to get regulatory consent in the United States since ACF. Strongly minimum in calls center may be seen within Monday's scale since a possible in conflicting checking out on calls off and put up and come back to NAB.TOD. The existing instrument shows that spot Bitcoin ETFs are likely to witness huge volumes when they see the light of the day. When the leader starts performing, it generally lifts the entire sector. That is seen in the strong performance of altcoins, which have risen sharply from their multi-year lows. However, after the initial rally, some altcoins will struggle to maintain their up move, while a few will lead the markets higher. It is better to stick with the leaders, as they are most likely to outperform during the next crypto bull phase. Let's look at the charts of the top 5 cryptocurrencies that may extend their rally in the next few days. And Bitcoin pulled back from 35,280 on October 24, indicating that higher levels are attracting selling by traders. The bears tried to start a deeper pullback on the October 27, but the long tail on the candlestick shows solid buying at lower levels. Although the rising moving averages indicate advantage to buyers, the overbought levels on the relative strength index suggests that the BTC-USDT pair may spend some more time in consolidation. The important level to watch out for on the downside is $32,400 and then $31,000. Sellers will have to pull the price below this zone to seize control. And conversely, if the price turns up from the current level and breaks above 35,280, it'll indicate the bulls are back in the driver's seat. The pair may then surge to the next target objective at $40,000. The 20 EMA is gradually flattening out, indicating that the bulls are losing their grip in the near term. That could keep the pair range bound between $35,280 and $33,200 for some time. If the bears yank the price below $33,200, the pair may tumble to $32,400. So on the contrary, if the price turns up and rallies above $35,280, it will indicate that the current consolidation was a continuation pattern. The pair could then skyrocket toward the $40,000. Ether climbed above the $1,746 resistance on October 23 and reached 1865 on October 26. This level attracted selling by short-term traders, which pulled the price back toward the breakout level of $1,746. The bulls successfully defended the retest to $1,746, indicating that the level may act as a new floor. The rising 20-day EMA 1393 and the RSI near the overback zone indicate that the bulls are in command. Buyers will then strive to push the price above $1,865. If they succeed, the ETH. If bears want to prevent the upside, they will have to yank and sustain the price below $1,746. That could open the doors for a fall to the 20-day EMA. The 20 minutes on the 4-hour chart is flattening out, and the RSI is near the midpoint, indicating a range-bound action in the near term. The pair may continue to swing between 1746 and 746 and 86.5 for some time. If bulls kept the price above $1,812, the likelihood of a rally to the overhead resistance of $1,865 increases. On the other hand, if the price maintains below the single 20 EMA, the bears will attempt to tug the pair below $1,746. If that happens, the short-term trend will turn bearish. Aptos rallied sharply in the past few days, indicating that the bulls are attempting to make a comeback. The APT/the APT pair witnessed profit booking near $7. But a minor positive is that the bulls did not give up much ground. This shows that every minor dip is being purchased. The bulls will again try to overcome the obstacle at $7. And if they manage to do that, a pair may start its march toward. Instead, if the price turns down from $7, it will suggest that the bears remain active at higher levels. The pair may then spend some more time inside of the tight range between $7 and $6.20. A break below this support could signal the start of a deeper correction. And next chain, the pair has been finding support of the 20 MA, but the negative divergence on the RSI suggests that the bullish momentum may be slowing down. If the price breaks into scenes below the 20 EMA, it will indicate the start of a deeper correction to the 50 SMA. This remains the key level to watch on the downside, because if it cracks, the pair may slump to $5.80. On the upside, the bulls will have to thrust to the price above $7 and $2 to indicate the start of the next leg of the recovery. Okay. Quant rose above the breakdown level of $95 on October 23rd, indicating that the markets have rejected the lower levels. The buying continued, and the bulls propelled the price above the downtrend line on October 25th. This signals a potential trend change. The short-term bulls seem to be booking profits after the recent rally that may pull the price down to the downtrend line. This is an important level to keep an eye on because a drop below it may suggest that the rise above the downtrend line may have been a bull trend. And on the contrary, if the price snaps back from the downtrend line, it will suggest that the bulls have flipped the level into support. If buyers clear the hurdle at $110, it will indicate the resumption of the rally to $120 and then to $128. The 4-hour chart shows that the QNT/USDT pair is facing selling near $108. The bears pulled the price below the 20 EMA, indicating that the short-term traders are booking profits. If the price slips below $103, the pair may drop to $100. Instead, if bulls sustain the price above the 20 EMA, it will suggest that lower levels continue to attract buyers. The bulls will then make one more attempt to drive the price above $110 and start the next leg of the up move. 2-4 chain broke and closed above the overhead resistance of 2 on October 23, completing a bullish inverse head and shoulders pattern. Both moving averages are sloping up, and the RSI is in the overbought zone, indicating that bulls remain in command. However, in the short term, the RUNE pair may sim its sorts and enter a minor correction or consolidation. If the pair does not give up much ground from the current level, it will suggest that the bulls are holding on to their positions that may improve the prospects of a rally to $3 and subsequently to the pattern target of $3.23. If bears want to prevent this uptrend, they will have to pull and sustain the price below $2. The pair has been in a strong uptrend with the bulls buying the dips to the 20 EMA. Although the upsold moving averages indicate advantage to buyers, the negative divergence on the RSI suggests that the bullish momentum may be weakening. If the price skids below the 20 EMA, it could tempt short-term traders to book profits. That could pull the price to the 50 SMA. Contrarily, if the price rebounds off the 20 EMA with strength, it will signal that the sentiment remains positive. The bulls will then try to resume the up move with the break and close above 2.57.